You're listening to Agriculture Today, our Friday edition, as always. Thanks for being along with us. The grain markets are our first order of business, and we'll touch base once again with grain market economist Dan O'Brien of K-State Research and Extension. Dan, of course, is stationed in Northwest Kansas out of his office in Colby. Dan, we're going to get into your latest price probability projections for corn and soybeans as we go along here, but we do see now some folks taking an early shot at those expected plantings ahead of the USDA's report due out at the tail end of this month, and getting some numbers floating out there as to which crops may be planted to what extent across the countryside. You're watching those too and have some thoughts.
Well, I'm springboarding off of what the USDA said in their Outlook conference, and now that we're into March and we have a clear path to actually getting in the field and getting going, just certainly relevant to consider that. So, upon reflection, when you look at what the USDA had said in their meeting, they'd indicated that soybeans were going to be up about 7% and corn was going to be up 1%. Now, you and I've talked about how in the past there were some farmer surveys that kind of flipped that a little bit, showing soybeans up 2-4%, and corn up more like, instead of 1% like the USDA said, more like 2, 3, or 4%. So more, if anything, the farmer surveys are more balanced between the two, whereas the USDA went to the polls. So and so I think that that upon reflection, when you look at why the USDA put that 7% number out there for soybeans, I think it has a lot to do with just how tight stocks are projected to be. Because when I work at putting those scenarios on paper and figuring yields for instance, for soybeans, just take a look at it while we're here. If you plug in the USDA's projection, 7% higher acres, then you go from 83 million and 83.084 million in 2021 up to about 90 million. And then you adjust a little bit for harvested acres, plug in a decent yield, 50.8 bushels per acre, and you end up with the ability to basically keep crush and exports about where they're at. A little bit of adjustment higher for crush, about 50 million bushels, not much in the big scheme of things, lower for exports. And you end up with stocks to use at 145 million bushels, 120 for that next mark, and you're 120 in this year, and prices at about 11.25. Again, 3.2% stocks to use, et cetera. So why did the USDA put 7% higher soybean acres? Well, when I look at scenarios like 2 to 4.5% higher acres, and there's no way to maintain 100 million bushels of carryout at the end of that without having to crunch back to some degree. I say crunch, either more or less, but still reductions either way in both exports and crush. So I think they put that number out there to basically balance the balance sheet. I've heard other analysts say that what we're shaping up to have, given these tight old crop ending stocks, which have become the really tight new crop beginning stocks, we're in a situation where we have to thread the needle and have a tremendous crop year. Because if we don't, we'll have price rationing and moderate to severe, depending on what we actually have. And with pretty dry in parts of the Western Corn Belt, and concerns in northern Iowa again. So so what the USDA had done by putting that 7% there and coming in with 50.8 or almost 51 bushels per acre, which is towards the highest we've seen, is basically, I think it's an effort to balance the balance sheet.
How does that parlay then, Dan, into your probability projections for soybeans?
Well, I think that that the planted acres number, we'll give the USDA their due this early on, with strong soybean prices. We've got new crop, old crop bids as we talk, we're above $14, but the new crop bids out there in November are, they're about 80 some cents, 70, 80 cents below that at 1244, 1243, something like that. That's yesterday's numbers. So on Thursday's closes. So how's that parlay into what the markets will do? Well, I think you take what the futures are showing for new crop bids, again, somewhere around 1240, 1250, thereabouts. And if we get all that the USDA has said, and they projected the price at $11.25 a bushel. If we get a 2% planted acres increase instead of 7, then you're heading for 12 or above 12 for an average price. So that's the stakes. Then 4.5% planted acres, and with some rationing going on, you're hovering around 11 and a half, something like that. But I guess the draconian outcome that's a hyperbole statement, isn't it? But the outcome to really be thoughtful about is when we come in at 1101 on the last day of March, and that planting intentions survey comes in and says, well, we're more like 2% more higher soybeans. No, yeah, we're going to plant more corn. And then people they go straight to the balance sheet, start calculating this and figure out, oh my gosh, we're gonna have to ration something to get to the end of this. So that's I think that's why the USDA put 7% out there, which, if we put 7% higher beans, well, there's only X amount of land in the United States. We have a lot of land, but there's still just that much of it around. And so they came out and put 1% higher corn acres from 90.8 million up to basically 92, which is, a lot of acres, still more than soybeans. But that 1% is less than some of the farmer surveys we'd seen earlier. So again, what's that number going to be? And and what they did, they put in 179.5 bushels per acre as a U.S. yield, and 176 or so is the highest we've seen. So again, another thread the needle type of a situation. You got to have not just a good yield, you have to have a record wonderful yield to make this thing work out. And in doing so, they basically took last year's ending stocks, 1.502 billion, and added 50 to it, at 50 million, and did that without a lot of rationing. In fact, they jumped up their ethanol projection. They jumped up their feed residual use projection, kept and also raised their export numbers. So it's if you come back and say, well, I see where our use is at now, and I wonder where all this would go. They raised those usage amounts, and also and lowered the projected price by a dime from 430 to 420. So it's not that this can't happen, but boy, things have got to fall right for this thing to work out, and to end up and to be able to go from 1.5 billion up to 1.55, and to not see things really hop around. And I've got a couple scenarios where I look at not just 1% higher prices, higher planted acres, but more like 2.5 and up to 4.5, and that can happen. Really, I think what we're going to find out is farmers that know how to grow corn and can do a great job of it, it's their distinctive competency. Do they stay with what they know and what they perceive to be risky times, or do they shift around more and go to other crops? So we're going to see what happens on March 1st, or what they say they're going to do. And even with that, there'll be a lot of uncertainty to going forward. But anyway, if you do get more like 2.5% higher acreage, or 4.5 for the 2.5% higher deal, then instead of 420, well, about 410, as a price, you're down about a dime. if you get to 4.5% higher acres, then at least by my thinking and your back calculations and seeing what fits, then you're at then your stocks to use go from about 10.3 up to about 12.7, and your price is probably closer to 375, 380.
So that's your worst case scenario then.
Well, the worst case is much worse than that, probably, but
reasonably speaking.
That's assuming 175 bushels an acre. You could still have higher acres and have a dry year and have a lot higher prices. But so I guess, as you can tell, I get kind of get all energetic about dealing with the uncertainties that these markets are facing. By the way, as you look at the numbers, the USDA and they projected basically a 20% increase in grain sorghum acres. So they're thinking that in these drier areas, that's drier areas and parts of Kansas, Texas, and even elsewhere, you'll see more grain sorghum being planted. And that's symptomatic of not just the current tremendous basis, but the new crop bids. So anyway, just a really thought-provoking set of outcomes to consider. And as you think more on what came out of that USDA Outlook conference, it just grows more and more in terms of the uncertainty of this. We haven't talked about what's been happening in South America in terms of delayed and reduced quality now soybean harvest out of good chunks of Brazil, dryness in Argentina, rains forecast, but we Western Kansas, we view forecast as somebody's opinion until it happens, and that's sort of where they're at there. The markets have again rains to come and help that situation, and hopefully they do, but they're not. But that's on the come. I would say we haven't talked about wheat yet,
and we should because wheat clearly is keyed fully in on conditions in the Central Plains and elsewhere, which have been dry up to this point. Hopefully that'll change this weekend.
It's command performance. We've broken dormancy. We've either done it or we're doing it. And some hot, dry conditions with moisture forecast. So the track of those storms, the quantity that's come, et cetera, it's all important. And I would say that the dryness we've had has, well, how can it not have reduced subsoil in some of these Western Kansas areas? Worse in West Central, I think, in Southwest, but still tough in those areas, and on into Eastern Colorado, et cetera. So what's my point? My point is that 50 hundredths isn't going to replenish the soil profile. You just live to fight another day, and it'll be welcome, but boy, you need more like 2.5 or something to really right the ship and to alleviate some of the dry condition worries we have out here in the West. So we mark it as I think we'll in 2 weeks we'll have a lot more accurate view of what we actually have for prospects, and a lot of that will depend on the rainfall that we do or don't get during that time frame.
So it'll likely remain a weather market for at least the relative near term.
Yeah, hard red winter wheat out of Kansas, Texas, these areas is important in not just the U.S. markets and important in the world market. So it's a factor.
All right. Dan, of course, has his full notes on the grain markets, including his latest price probability projections for corn and soybeans, as we covered right here, in his weekly notes at agmanager.info. Be sure to have a look at those producers. A good weekend to you, Dan. Many thanks.
Thank you, Eric. Take care.
Dan O'Brien, grain market economist, K-State Research and Extension, with his weekly observations on the grain trades here on Agriculture Today.